So what then is an accounting? We all know in our lessons simple way that accounting is just a process of recording, summarizing, classifying, interpreting interpreting events or financial activities to gives you an informed judgment, or to be provided to end users to be able to make an informed judgment. That's the basic that each and every one is taught, which we always go by, even from SHS through the university to professional courses to other levels. When they ask about accounting, we just say a process. So an accounting is a process, which means that it has so many steps or different activities, different actions that aid in recording, classifying, summarizing, and interpreting of accounting information or financial information that can be used by end users to make a meaningful decision. So the key point is that if those information cannot be used for an informed judgment, then there is something wrong with your accounting principle. Then now, in every accounting profession, there are basic principles that guide whatever is being done. There are just basic principles that guide whatever is being done. So in accounting, we have a very basic principle that each and everyone must have on his or her fingertip. That is, every debit entry must have a corresponding entry. Every debit entry must have a corresponding entry. So what then is the debit and the credit? So in every aspect of an accounting, what we usually take into consideration is the credit and the debit. Now, for us to simply understand what debit means, they gave us a simple statement that you must always credit the giver and debit the receiver. Credit the giver and debit the receiver. So if the person who is receiving, you always debit that person, but the person who is giving out, you always credit that person. Now, this led into the three terms that are always used in accounting. The three terms that are always used in accounting. That's one we call the capital. The capital or owner's equity, or some people call it shareholders equity or shareholders fund. Some also call it stated capital. It's just simply monies that are contributed by the owners of the business. So that have to be the focus of one side. Money or resources or items that are contributed by the owners are always referred to as owner's equity or shareholders equity or fund or stated capital. Now, we have assets as another terms that are always used. And in that, when we talk about assets are resources. They are resources that are owned by the business. So those resources that are owned by the business are known as assets. Then we have the liability. It's just exact opposite to asset. So resources that are owned by outsiders to the business. Resources that are given by outsiders to the business are also referred to as liabilities. Then within the assets, we have two types. We have the non-current asset and we have the current asset. So the non-current assets, it means they have the lifespan more than one accounting period. It means their lifespan, like the rate of use, is more than 1 year. You can use it more than 1 year. But when it comes to the current asset, it is within one accounting period. Within one accounting period. I'm just doing a summary of this because this is not much part of the training, but because of people who don't have the accounting background, that's why we want to understand some basic concepts in accounting before we delve into the various accounting systems. Because the systems that we'll be learning on are made up of both inventory and accounting. And for you to successfully operate those systems, then you must be able to have a bit knowledge in accounting, which is the basic, and also a bit knowledge in inventory management. That's why you can see the inventory management and warehousing as part of the training course. Then now, in terms of the liabilities, which are claims or resources owed by outsiders to the business, that also have two types. We have the current liability and non-current liability. It also have the same, its lifespan is less than 1 year, that is current, and more than 1 year accounting period is the non-current. Now, in terms of accounting, there are reporting systems. There are a lot of reports. There are a lot of reports that are needed to be prepared at every accounting period. At the end of every accounting period, there are different reports that are needed to be prepared and audited. Therefore, we have the first on the list as the comprehensive income statement. Comprehensive income statement. So this particular statement contains your revenue and purchases at one side, doubling with your expenses. So your revenue less cost to sales, that's the purchases. Then your expenses at the other side. At the other side. Then you also have another statement that is needed. We call it the statement of cash flow. This statement of cash flow takes into consideration in other this thing, they will refer to it as cash book. That's strictly inflow of cash and outflow of cash. must be recorded in that statement. Then the third is statement of change in equity. Statement of change in equity. So that statement of change in equity is also used to prepare or to determine the value of the owner's equity, which we talked about from the beginning. Then finally, we have the statement of financial position. The statement of financial position. So this statement always contain the assets, the liabilities, as well as the owner's equity. So this particular statement is important because it really shows you the position of your business to know whether your business can continue operating or there is something wrong with your business. Any questions so far about the background in accounting? Anyone with any clarification? I'm doing this. Oh, any question?
Yeah, hello.
Yeah.
Please.
Yeah.
My name is Simon.
Okay, Simon.
Okay. I saw that you listed after listed the credit and debit. You said there are three ways in accounting. They listed capital asset, and the third one I did not get it to. I don't know if it's liability or the owners of iniquity. If you can clarify that, please, a little.
Come again. Sorry. Come again.
I was saying that after
Yeah.
enumerated the credit and the debit,
Yeah.
you mentioned capital. You say you have three steps under
Okay.
the.
So yeah.
So you
So I was
mentioned
saying there are, like, enabling accounting principles or concepts, there are three terms that are always used or that are worked with. So we have the assets.
Yes.
The capital, and we have the liability.
Liability. Okay. I got it now.
Yeah. So I try explaining what asset is, what capital is, and what liability.
Okay. Thank you.
Are you okay there?
I'm okay now. I'm okay. There is a third one I wanted, the liability, but I got it.
Yeah, so I want this thing to be, because as I told you, practical. You can just raise up your hand, I'll call you. Then from there, we move so that we'll all be at par with one another. I think that's good to go, right?
Okay.
Yeah. Okay. Any other? Okay. So now, in every accounting system, the developers of those computerized accounting systems have integrated all accounting components, principles, concepts, as well as presentations into programming those what's the name, accounting system. So in dealing with any accounting system, first and foremost, one must be able to identify or plan its chart of account. And what then is chart of account? In accounting, when we say chart of account, there are lists of activities, lists of events, lists of financial happenings or observations that are classified under various categories to be able to determine whether that particular event or financial information is a revenue or an expense. It's an asset or liability. Or sorry, what are the various ledgers that can be found under the group ledger or the group heading non-current assets? So now, under the non-current assets, we have the property, plant, and equipment. We call it in short PPE, property, plant, and equipment. And these particular ledgers contain one, building. So in every business, we presume that you might be having offices. You might be located somewhere where you have an office for which your clients can meet you and transact business. So that particular office space is referred to as building. Then there are lands. Maybe those who acquire lands on which they are trying to build on or they've already built on. Then also we talk about fixtures and furnitures. The fixtures and furniture, maybe the tables, the chairs that you use, the cabinets that you use to store your books, and all those things form part of the furniture and the fittings. Then we have the motor vehicle. That's those who have cars, trucks, and other forms of vehicles that aid them in business activities. But know that those vehicles are not personal vehicles. They must be vehicles that are. So if you, the CEO, you have a car that you are, which is not registered Please, is Body also having network challenge. It seems, I don't know.
Yeah.
Yes, I'm also having.
On at every few minutes. I don't know how's that. So that's it about the asset aspect. Then we also have asset. Remember, I said we have two types. We have the current and the current. The current aspects are the stock, if only you are dealing in or you are a wholesale business or FMCG, where you buy goods and sell inventory, either keep a stock or an inventory. Then also your banks or your cash. That you deal in, they are all part of your current assets. If there are insurance that you prepaid, you pay in advance. If you pay in advance, it's an asset to you. Then some loan advances that you give to your employees. Maybe you are working with some people and they said they need salary in advance. All those things are an asset to you because they are current asset because they will be utilized within one accounting period. Then we come to the liabilities where the non-current we have the long-term loan. Maybe you've gone to the bank to pay annually or over more than one accounting period with an interest that can be considered where the equity, which is the capital, is also the contribution from the owners to the business. It's also the contribution from the owners to the business. So that's the composition of the financial statement or reports that are always prepared at the end of each accounting period. So all chart of accounts must be determined by you if you are called as a data entry accountant, account clerk. So for you to be able to configure the financial system or the accounting system of every, know the chart of account organization. Any questions so far on the accounting, the chart of account? Any question? Are we good to go? Yes.
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 Okay. Yes, the network seems to be disturbing almost everybody. Try to manage it. We are in Ghana. Okay, so having understood the chart of accounts, now in configuring of every accounting system, of the organization, either the mailing or the postal or the residential, then also the contact of the organization, the email of the organization. Then also you consider whether the type of account that you are operating is based on accrual concept or cash base. When we talk about the accrual concept, it means that as and when the event or the financial activity is incurred, whether paid for or not, it will be recorded. But when it comes to the cash base, it means as and when for you will not record. So until a payment has been received or a payment has been done, that particular transaction will not be recorded. That's the cash base. But the accrual concept, as soon as the event occurred, it will be recorded. So if you understand that, you configure that one as well. Then the type of organization that you are dealing with is more important, because something like organization or company limited by guarantee, which is NGO, foundations, social enterprises who do not make profits, for them, what they prepare is income and expenditure statement. So statement of income and expenditure. But organizations that are limited by share, where we have the shareholders, or organizations that are sole proprietorship that engage in profit-making activities, they prepare something we call the comprehensive financial statement. The comprehensive financial statement. So you must understand the difference between the type of companies you are dealing with to be able to configure the financial, like configure the accounting system for them. Then other things that are needed is the configuration. How the various blocks or the various commands in the systems will be operating. How the various blocks, how the various commands in the system can be operated, which at the tail end will reflect the true financial activities or happenings of the business. So our next training, we are going to see the practical aspect where I'll show my screen. Then we'll start from the beginning. So we'll be starting with the tally accounting system. We'll see how to configure it, set it up, and make it ready for use, and how it can be used. So the next training will be on setting up of Tally accounting system and its usage. Then we'll move on to QuickBook. We'll move on to Sage. Then we'll move on to Inox Digital and other financial or accounting system. In each of them, they have their different ways of configuring because the development or its development varies, though they are all based on an accounting principle. But in terms of the configuration, they are different. So get prepared next as we practicalize what we are learning today, where everybody will see the screen. We start by how to configure the accounting software, that's Tally, then how to use it. What will happen is I'll send you the Telegram link to I'll send the Telegram link to the WhatsApp group where all files that are needed for us for this training will be shared there. So in terms of videos, in terms of PDF, so that in terms of even the app, because before we can use it, everybody have to get laptops where you install the educational aspect of it. So anytime we finish the practical aspect during the training, you can equally go home and also do the same thing. You can equally go home and do the same thing. You can only benefit and learn more if you have the PC with you or PC with you where we finish learning and you also go back and do the practical. Any questions so far on configuration of systems?
Hello. Please, I want to ask,
Yes.
during the
Yes.
during the
This is
configuration,
Roberta, right? Okay.
yes. So you ask the company or whoever it is you are preparing the accounts for whether to use accrual concept or the cash based concept. Would they tell you, or you have to decide which one to use for them? Thank you.
Okay. So every company before you even enter, or you'll be employed, or you'll be contracted as a consultant, have their accounting basis or method that they use. So with an experienced accountant or auditor or consultant looking at their recording, book recording, okay, you can determine whether it is accrual based that they are using or cash based. But anytime you are being employed, they ask for experience, yes. But what you must do is that we also learn on the job. That's why we call something onboarding. Whenever a new employee is taken, especially in terms of the accounting domain, taking over from somebody who is doing a recording before you is very difficult. So you must have an onboarding system where they explain to you all the type of accounting records that they have and the methods that they use. But if it is you that is starting newly, maybe the company is new now that they want to start, then depending on the nature of the business, you can determine or you can suggest which particular method that can be used, because both have advantage and disadvantage. The accrual concept is that it makes you have a future, know the going concern of your business. Because as and when the this thing is the financial statement or the financial activity occur, you record. So you will be able to get accurate records. But when it comes to the cash base, as and when the payment is done. So what about the person that you sold to, and maybe you have missed the record and the person didn't pay? It means you cannot record. Because the person does not pay yet, you are not going to record until you receive the money from the person. You are not putting it into your book. So sometimes it's dangerous because you might forget who owes you and who you also owe. But for the accrual concept, whenever somebody owe you, you put it in the book and show that this person owe you. So anytime the person pays, you reduces the person's balance and record against the person's balance. So it always make you keep accurate records. So it depends on when and how you are handling the accounting system or how your job is allocated to you. Are you clear?
Yes, thank you.
Welcome. Any other?
Fairly here. I just want to confirm, is the income and expenditure account the same as profit and loss? Or is it different?
So I would say it's different. The reason being that in income and expenditure, we don't have anything like profit or loss. Do you get me?
Okay.
What we mostly declare is surplus and deficit. It's just like the way budgets can be. There can be a surplus or deficit, yes. So for the income and expenditure, what goes into it is all monies that comes to you in terms of revenue. All monies that come to you in terms of revenue is recorded in the revenue or income side. Then all monies that are paid out. Okay, that's why those things are like that statement is being prepared by non-profit organization. Because they don't have any element. There is nothing like buy and sell for you to say that you are making profit or not. That you are making profit or not. But when it comes to the comprehensive income statement, which is the same thing as the profit and loss account, for that one, there is a cost to doing business and there is a benefit from doing business. With the difference of giving you the profit. So the two are different statements prepared by different type of businesses.
Okay, thank you.
Yeah, welcome. Any other? Okay. So what then? Moving through the accounting principle, knowing now the basic knowledge and principle of accounting, we are delving into inventory management, which is one major factor in all accounting systems. And it's also good with FMCGs, that's buying and selling businesses. So when we talk about inventory, it's just simple goods that are bought and sell. So whenever somebody engages in buying and selling of activities, then the person is basically doing inventory management. So when we talk about inventory management, it's just a process put in place to be able to control the movement of your stock during business activities. So you take care of the inflows, which we call the purchases, the goods inflows, the goods that you go outside to go and purchase, either from other depots or other businesses, and come and sell. Then the outflow is the sales that you make, how goods leave your shop, how goods leave your business. Now, in inventory management, there must be important things to note, that when you are dealing with perishable goods or goods that have expiry, then there must be a concept that are always apply in inventory management. We call some the FIFO-LIFO. So we have the FIFO, that's the costing people, those who have done costing and all those. We call something FIFO, first in, first out. Then LIFO, last in, last out. Depending on what you are dealing with. When you choose the FIFO-LIFO, you are saying that the goods that you bought first, if nothing at all, another goods come in, whatever must be sold must be the old one. That's the first goods consignment that you bought. That must be sold first. In a sense that if for you to be able to control the expiry, so in each financial or accounting systems, there are slots that are allocated for expiry dates, which must be entered in order to get information on all your goods that are expiring at a particular point in time. Also, you must consider the single known unit of each product. We call it SKU. SKU, the single known unit of each product. You must also understand the brand that you are dealing with, the composition of brands that you are dealing. So for instance, we have the Royal Apple, so the brand is Royal Drinks. We have Special, we have Awake. There are some companies, their product brand is the same as the name of the company. But there are some that the company name is different from the product brand name. So for instance, Trillium, they are into the Vena, but the company name is Trillium, but the product name is Vena Water. So you can see that the brand name is different from the company name. We have Baron Limited. They are into the producing of ice drop water. So you can see the name of the company is Baron, but what we have is price drop. When we come to the Despite group of companies, but within that we have Special Ice Water, we have Special Drinks, among others. So their brand or product brand is Special. So that's how it works. You have to understand all those. You must to know the cost of each product. And you must to know the price at which, the selling price at which those products will be sold. All those things will be configured into the system. Some uses codes, some uses manual entry. So when we are doing the practical next training, you understood or you understand how each and every one of them works. So inventory management is so one important aspect of business management. And a lot of people have taken it for granted. So when somebody is being employed as a warehouse officer, people thought it's just about, oh, you in charge of goods. When you say, when the goods come, you come and package this. No, it's a full course that a degree can be awarded to, because it's a full aspect of business. Warehousing alone can be a full function of business, because you have to know how to control theft. You have to know how to control expiries. You have to know how to deal with obsolete products, damaged products. You must know product arrangement. Some product arrangement we call customer eye level. How do you arrange your product in the shop that will attract the customer? That as soon as the customer entered, he or she must buy something or must be attracted to what she wants. How well are your products presented or shelved in your business? All those things are part of the inventory management. How often do you clean your product? How neat are they? How are you able to do the reorder level, either maximum order level or minimum reorder level of a product? How do you always control this product is making more money as compared to others? How do you determine all those? All those are configuration being done in the accounting system. And if it will be configured using the human mind, how you want it to operate. Because whatever you feed in, that's the result that will be out. So all those, if somebody is calling for warehouse, it shouldn't be in a case where people look me down upon. People look me down upon warehouse officers, which is actually a wrong impression about warehouse officers. They are also a full business function on its own, which, if not well taken or managed, can lead to a lot of business failing. For instance, is a warehouse officer who plans delivery of your goods. So if in the sales department, all sales are processed to be delivered to customers, and warehouse manager is not able to plan his delivery and delayed in sending the goods to the customers, what will happen? It means the customers will also delay in paying. And when they delay in paying or receiving the goods, then it means it will take a longer period for you to supply to those customers again. So they play a key role in business dealing, especially those who are into FMCGs. So we don't take them for granted, but we mostly motivate them and let them know their importance for them to be able to make the supply chain so vital and accurate. Any questions so far?
It's
Any
Roberta.
questions?
Yes, please.
Okay. Yeah.
So you said something about the FIFO, LIFO.
Yeah.
Assuming I'm using, let's say, FIFO, and then price. These days prices of products change. So
Yeah.
if let's say the royal drink you mentioned, let's say royal apple, I've entered it into the system, and then today it's about, let's say, 3 cedis for a bottle. And then that's what I brought into, let's say yesterday, we have about 3 packs left. They are selling it at 3 cedis per bottle. And I decided to go to the market today and then go and buy new, what's it called? New packs.
Yeah.
And then I get to the market and realize that if I should sell what I'm buying today for 3 cedis a bottle, then it's not going to help me. When I take it to my shop, am I going to update? Though I had what I bought last, let's say yesterday, that even if I should sell it at 3 cedis, I'll get something, I'll get my profit or something. Am I going to adjust the prices because the new ones I've bought, prices have changed at the market? So the ones I bought yesterday, I need to go and adjust the prices on the system. Thank you.
Yes, it's very necessary. Like the practical example that you did, Royal Apple, you bought it yesterday for 3 cedis and you are selling it 4 cedis. Now you go to the market, you still have some of them there and you wanted to top up. You went to the market and realized that now they are not selling it 3 cedis again. They are selling it 4 cedis, which means automatically you have to sell it at 4 cedis 50 pesos. For you to get an accuracy and for you to continue business, then you must go back to adjust the price of the old ones to the cost. So you move the cost from the 3 cedis to 4 cedis, and now the selling price from 4 cedis to 4 cedis 50 pesos. If you don't do that, what is going to happen is that when you still continue, because you thought you had it at 3 cedis, so if you continue to sell it at 4 cedis, it means know that you are going to add your profit to the cost to be able to purchase a new one, which means what you are doing is what you are doing is you are just selling for the suppliers, but not making any profit. Do you get me? So anytime you go and you get a price change or the change in cost, you must also adjust the cost for both the old and the new. The same thing applies when during March, the price of items went higher. Then after the Easter celebration around May, June, price of the same thing reduces. Now what happened? A lot of people have goods when the price was higher, because when the price was shooting up, they thought the price will go more. So they went to purchase a lot of product down and they couldn't sell. Then the price of the goods came down. It's a loss to them. But can they sell it at a loss? No. So what they do is that they need to now find an average between the new price and the earlier one and sell the product so that they can break even. So at every point in time, you must recost. And when you recost, you must sell the old product before the new one that you bought today, just for you to prevent expiry as well as damage of packs and all those things, depending on the old one. Is that okay?
Yes, please.
Okay. Any other? Any other clarification? So having understood the basic of accounting principles and inventory management, next training, please everybody must try as much as to have his or her computer by. As I said, I'll be sending the Telegram link. Make sure you join it. All materials will be put there, especially the softwares, so that each and everyone can install. If you are having any problem with it, you can call me. I'll help you install it and get your installation ready before the training. Because next one will be a practicalized one where everybody will be watching the screen. You see how we'll do the configuration. So we'll do the configuration and also see how we can use the Tally accounting software. Then from that one, we move on to the next accounting system, which will be practicalized again because we've already learned the theories, what is needed. Then when we finish, we do practical. Then everybody will get an assignment and do the practical aspect of it. You present. So the next, before we move on to the next software, everybody have 2 minutes to present whatever he or she have done in terms of the assignment before we continue. I hope that's okay.
Yes, please.
Okay.
Okay. I don't intend taking much time for our work. If it is theory aspect, we are not taking much time. But if it is practical, at least 2 hours we'll work on. But in terms of the theory, within 1 hour, we are done. So that will all be at par with one another. We all know it's virtual and keeping people longer. Some will intend to log in, but they will not be paying attention. Just because they know nobody will monitor them. So I don't intend keeping a lot like people for long. But for the practical aspect, if you miss it, you miss it. So with a little in conclusion or a summary of what we've learned today, we learned about the simple accounting concept where we say we have two methods. We have the cash-based method and we have the accrual method. The cash-based is when money is received or paid before a transaction is recorded. But for the accrual, as and when the transaction occurs, it must be recorded. Then we also talk about the three terminologies that have been running through all accounting practices, which are the assets, capital, and liabilities. We explain each and every one of them. And we also continue to explain the reports or the statements that are always produced depending on the type of businesses that you are running. We also move on to explain the chart of accounts that is needed for you to understand or must be prepared in order to configure an accounting system. Then we went to inventory management, where we talk about the FIFO and the LIFO. We talk about the minimal level and the maximum level and the reorder level. We also talked about the positioning and the arrangement of stocks, which are mostly known as the customer eye level, how to arrange products in such a way that it will attract customers to buy your product. Just want to take the opportunity. Yes, today we have 14 people on board, which is quite a number. And I hope you've learned something, especially those who don't have the accounting background. I hope it's good for us to build our practical experience in the uses of accounting software. You can equally go and read on, and also I'll be putting some materials down. You read on it, and when we do the practicals, we'll all be at par with one another. Thank you very much.
Okay, thank you, Aso.
So without any further clarification, as I said, the platform is supposed to be used for networking as well. So a day will be set aside for which we will do self-introductory using our pictures, name, where we work. If you are already working or you are open to job opportunities, you indicate it. So I'll start by mine the way it will be. Then you all follow suit so that we will know one another in terms of business opportunities that we need, in terms of employment opportunities that we have. We can link each and every one of you so that we'll be beneficial to one another. So without any further clarification, we'll bring today's program to an end. And each and everyone to subscribe to the Telegram so that you can get the material that will be needed and also the softwares will be sent one by one. So I'll send the Tally accounting software for now for everybody to install on his or her computer to be used in our next training. So our next training will also be decided upon on the page through the voting again. So you all pay attention to it so that we'll make it so simple. Thank you very much.
Thank you.
you. Really appreciate.
Yeah.
Thank you.
Thank you. We are most